All right, today we're jumping into a really deep analysis of a fascinating player in the Indian pharmaceutical world, Supriya Lifescience. We're going to peel back the layers on this one, from their business strategy to their financials and what they've got planned for the future. So let's get right into it. I want to start with just this one number, 28.5%. Let's just let that sit there for a moment. In the business world, anyone can have one good year. But to post a number like this consistently, well, that's something else entirely. Yep, you're seeing that correctly. For 5 years running, this company has grown its sales by an average of over 28% every single year. This incredible growth is really the heart of the story we're unpacking today, which paints a picture of a really high-quality business with a future that looks bright. Though, as we'll see, it's not without its risks. So, first things first, who exactly is Supriya Life Science? Well, they're a huge player in a really critical corner of the global healthcare industry. They manufacture what are called active pharmaceutical ingredients, or APIs. This slide really gives you the highlight reel. You've got a solid lineup of over 40 different products. They've got the stamp of approval from the toughest regulators in the world. We're talking the US FDA and its European counterparts, and they sell to more than 60 countries. But look at that last point, 0 warning letters in 5 years. I mean, in the highly regulated world of pharma, that is a massive badge of honor. It just screams quality. So that begs the question, right? How did they pull this off? What's their secret sauce? Well, the answer is baked right into their business model and some really smart strategic advantages they've built up. But before we go any further, let's just make sure we're all on the same page. When we talk about an API, what does that even mean? It's simple, really. It's the part of the medicine that actually works. It's the engine in the car, the ingredient that produces the health effect you're looking for. And making these is Supriya's specialty. And here's where their strategy gets really interesting. See, unlike the massive pharma giants that try to do everything, Supriya is what you'd call a pure-play manufacturer. They don't try to be everything to everybody. Instead, they focus on one thing, being absolute masters of complex chemistry. This allows them to build incredibly deep, trust-based relationships with their customers. So how do they protect their turf? Well, the report calls these their competitive moats. And honestly, that's the perfect way to think about it. These are the defenses around their business castle. Think about it. It costs a ton of money and takes forever for a new company to get regulatory approval. Their deep knowledge is really hard to copy. And once a customer starts using Supriya's API, it is incredibly painful and expensive for them to switch to someone else. These moats are powerful. Okay, so a cool business model is great on paper, right? But do the numbers actually back it up? Let's dive into the financials, because this is where the story gets really compelling.
Hey, remember that wild number we started with? 28.5%? Well, this is what it looks like in practice. In just 5 years, the company has more than tripled its revenue. This isn't just steady growth. This is an explosion.
And here's the kicker. It's not just their sales that are booming. Their profits have actually grown even faster, at over 32% a year. That shows they're getting more and more efficient as they scale up, which is exactly what you want to see. And you can see that efficiency right here in their return on equity, a solid 18.2%. That tells you they are fantastic at turning investor capital into real hard profits. And maybe the most impressive part of all this, they've done it on a rock-solid foundation. Their debt-to-equity ratio is just 0.28. That's super, super low. This isn't growth fueled by risky debt. This is the sign of a genuinely healthy, well-run company. Okay, so it all sounds pretty amazing, right? But let's be real, no company is perfect. To get the full picture, we've got to look at the potential red flags. The report points out a few things to keep an eye on. Their inventory is sitting on the shelves a little longer. They're also pretty reliant on their top 10 customers. And since almost 80% of their sales are exports, big swings in currency could definitely have an impact. All right, so we've got a strong foundation and we understand the risks. So what's next? Where does Supriya go from here? Well, the good news is they have a very clear and pretty ambitious plan for growth. The report breaks it down into this really clear 3-part strategy. First, they're investing a ton of money to expand their manufacturing capacity by a massive 41%. Second, they're innovating with a pipeline of 12 new complex products coming down the pike. And third, they're expanding their global footprint, making a big push into Europe and Latin America. And to put that global push into perspective, check this out. Right now, Europe makes up about 22% of their revenue. The goal is to get that all the way up to 35% by fiscal year 26. That's a huge strategic shift to create a more balanced and profitable mix.
So what does all this add up to? Well, management isn't being shy about it. They're putting a big, bold target out there. 20 to 25% annual growth, aiming to hit 2,000 crores in revenue by fiscal year 2027. That's a clear goal.
Okay, we've seen the business, we've seen the incredible numbers, we've seen the plan for the future. So what's the final verdict? How does the market see all this? Let's tie it all together. Generally speaking, the big market analysts are pretty bullish. You can see most of them have a buy or add recommendation, which means they think the stock has room to run. But, there is some caution in there too, with a hold from Quotac, likely centered around valuation. The report's own analysis lays out two possible futures. The bull case is the everything goes right scenario, where growth speeds up and they make more profit on each sale. The bear case is what could happen if competition heats up and growth slows down. It gives you a really realistic feel for the potential range of outcomes here. But when you boil it all down, the report's final take is pretty clear, and this quote really just sums it all up perfectly. It sees Supriya as a compelling opportunity, a company that blends a really strong business with a clear path for growth. So, where does that leave us? What's the bottom line? Well, what we've seen is a high-quality business with an incredible track record and a very tangible plan to get bigger and better. This leaves us with a one key question. Will their execution on this plan be the catalyst that unlocks the next major phase of their growth story? That's the real question to watch.